of the city.
Yeah.
If you can get like on a rooftop somewhere, you will literally see fireworks going all the way around you, 360 degrees.
Yeah.
It's a good time for sure.
I'm looking forward to it. Before we get started, what about you? You got any plans? What are you looking forward to this weekend?
Yeah, so I'm actually going to be off Thursday, Friday, going up to Wisconsin.
Oh, there we go.
And seeing
Cheesehead.
some family. Yeah, seeing some family. And I'm just gonna have 1,000 brats, and it's gonna be perfect.
I'm a hot dog. Yeah. I'm more of a hot dog. Yeah, the brats, I just never got around to it. Even since I was a kid. I think one time I ate one of the bratwursts that have the cheese in it. And when I bit that and it squirted out, ever since I was a kid, I just couldn't do it anymore. So good old 100% beef hot dog, I'll rock with that.
I love it.
Yeah.
Some people in the YouTube chat saying we don't have sound. I'm not sure if it's back.
We might be
Maybe
good to go now. They said they were reading the lips pretty well there. So
perfect. Okay, we're back. We're back. Look at that. Hello, everyone. We were just talking about eating 1,000 bratwursts, golfing, and taking some time for the 4th of July. So you didn't miss too much. But we've got, a minute until the futures open here. Just a quick rundown of things this week before we get into managing positions for a long weekend or long holiday break. We got Thursday jobs report in the morning. I'm interested to see if we look at SPX, the implied move for the week. So usually with holiday weekends, you kind of have this lull. July 2nd will be the last trading day. So Thursday, July 2nd will be the last trading day, but still pretty decent implied move here if we look at SPX, plus minus 115 points. And for a 4-day period, that's really not too shabby. If we were to extrapolate that, if this was a non-holiday week, you'd have probably 125, 130 points, which is pretty good in terms of volatility. You've got jobs report on Thursday. So I think that could be really interesting for the market. If you get a really strong jobs report, maybe it's a higher for longer interest rate outlook. They're already pricing in, a rate hike. Ultimately, if you look at the CME FedWatch tool, which is my favorite thing to check for interest rate probabilities, but we're currently sitting at 350, 375. There's a 30% chance we get a hike in July, which is absolutely insane. After all this talk about interest rate cuts, but 46% chance that we get a hike in September. And if we look all the way out to December, we have the highest probability of a 25 basis point hike. So have you been paying attention to this at all? Have you been looking at this, or kind of just trading as the markets move each day?
Kind of just trading as the market moves each day. But I mean, with oil kind of doing exactly what the Fed wants it to do now, but core inflation isn't, my question is, which matters more? Here, Mike. So an increase in rates will be interesting. We'll see. Interesting to see how it'll shake up the markets there. But again, oil getting down to the levels where they want it now. So it seems like it's a difficult game to play there.
Yeah, one of my friends just filled up and he said it was like $6. And I'm like, what are you doing? Where are you? Have you seen crude oil prices?
Is this premium? Let's see, my question is he doing
Probably.
Premium 90, the good stuff? But even then, six a gallon, that's a steep price.
Yeah, he's definitely pumping the good stuff. I think he's got a newer Beamer, so
yeah,
definitely
he's taking care of it.
Yeah.
But
yeah, I think all things considered, E-minis are up 850. Nasdaq's chopping around down 30. Down the Russell right now up a tiny bit, but so nothing crazy here. No gap moves higher or lower. We saw some headlines from some of the war stuff that might have spooked the markets a little bit, but at least right now, it's not looking like that's the case. NASDAQ just ticked green. So all four of the major indices, E-minis, NASDAQ, Dow, and Russell, all green right now. But yeah, jobs report Thursday, I think that'll be really interesting. And I think when you look at SPX for Thursday, it does have a pretty high implied move. If you look at Monday's 60 points in either direction, all the way out to Thursday, 115 points. So seeing the biggest IV reading in that day as well. So I think the market is prepping for that. But you also have some labor market data before that report. So you've got some stuff that could move the market. But again, I think Thursday, based on implied volatility in SPX, will probably be the day to watch if you're looking for some intraday volatility or maybe a gap down, gap up. E-minis and NASDAQ ripping higher now.
Yeah, I see we're getting a little bit of a reversal here off the lows from the Friday close here. Pretty aggressive so far, some decent volatility, especially on a Sunday night. I know something that's going to be interesting heading into this week, especially on products like NASDAQ. I know SPX, NASDAQ, ES, all those are highly correlated products. So the same range might be in the same area on all three of these products. But I know on NASDAQ, the most active traded level last week that had the most traded volume was 29,699, which is around that swing high, which we sold off from. So it's going to be interesting to see if, kind of this general area could be a little bit of a line in the sand. Obviously, we have things like NFP, some other fundamentals that could shift things, but it's going to be interesting. I think it's going to be a line in the sand, and we'll see how we shape up from there. Mike, I know these are very arbitrary levels, but kind of seeing how the positioning takes place after the fact will be cool to see, especially in a shorter week.
Yeah, 100%. And I think with these short weeks, I think it's always interesting because you have two camps. You have lack of volume, could see big moves, but then you also have nothing's going to happen. We might just be up or down like 10 points each day because nobody's paying attention. I think if I were to pick one direction, I think I might lean towards that, where you kind of have this inside chop and you kind of settle between the trading ranges that we've seen over the last week or so, especially with the volatility structure not looking too crazy. I mean, things have flattened out, which is really interesting. But even if you look through all of these expirations, you still have a contango, albeit it is flatter than we've seen in quite some time with these VIX futures. So,
no, most definitely. No, just looking for Frank, looking like he's taking advantage of this volatility that's hitting the market as the market opens up here. So shout out to NASDAQ there. And quick question. I know you've been speaking pretty recently on that MES strangle as well. I know Chris says over here, strange how little decay I've had on the downside puts for /MES. My upside is the same distance away, just about, and it has decayed a ton. He's got the 7,100 and 7,700 strangle on there. If the market were to rally this week, Mike, hypothetically, let's say we get above some important levels, whatever everybody has marked off on their charts, but let's say we get a rally, maybe above some of the highs from the end of last week. How are you thinking about managing something like a strangle if that were to happen? Are you kind of still just rolling those untested sides, collecting as much credit as possible? How are you approaching the strangle?
Yeah, I think the holistic answer for managing for a long week, or if you know you're not going to be around the platform, is to just push things out in time. So I've already done that with a lot of these positions, but like MCL, I've been rolling week to week specifically to pick up the implied volatility of these near-term cycles. But like MES, I'm already out 54 days. MNQ, I'm out 33 days. So I just put this trade on last week though, but I think that's something that I would consider because I put this on before we sold off pretty hard in the market. So it's marking a $170 extrinsic value loss. But what I would consider is like, okay, I'm at 33 days. Let's say, so for me, I'm going to be out Wednesday. That would be the last day that I can trade. So Thursday, won't be able to trade. Friday, market's closed. I'll be back Monday. But let's say I was out the whole week and I had an MNQ position and I was leaving tomorrow. Well, I'd probably take this 33-day position and I'd probably push it out at least a couple weeks. And you can see the nice thing about the Tasty platforms, you have this nice organization. So I know that all of these options expirations that are this darker shade settle to the Q contract. So I know like even if I'm in the 33-day, I can move it to the 40, the 54, the 64 before I get to the Z contract here. Even the 80-day is in this cycle, interestingly enough. But anytime you see a last price, regardless of what futures product you're looking at, when you see the last price change, that indicates you are looking at a new contract. So all of these options expirations, if I wanted to manipulate this trade and like buy this back and just move it out and desensitize the position to changes in the NASDAQ while I was gone, I'd probably just buy this back in the 33-day cycle and move it out to the 54 or the 64-day cycle, depending on where I want it to be. But I'm still leaning long here. I want to have bullish delta, so I probably wouldn't change the strikes all that much. I think if anything, I would keep the downside at 29,000. Technically, you can move it, and that's the nice things about these strangles is if I'm buying this back for 942 points, I just have to create a new situation or new trade where I'm collecting more than 942 points. So these markets are a little wide right now, but let's just say I went to the same strike here, and then I moved my call side up a little bit. That would yield me a net credit for sure. But again, these markets are wide, so I would wait and see if we have more opportunity in the morning when the markets are a little more active.
Yeah.
But yeah, that's something I would do is just like move near-term positions out a month or so and just give yourself a lot more extrinsic value, which will naturally desensitize your positions to intraday moves this week.
I got you. Especially like if you kind of still have the same directional bias, maybe even same level of conviction in that directional bias, just giving yourself a little bit more time and keeping that top of mind.
100%. And even with a position like this, like I'm leaning bullish here with the 29,000 strike that's just out of the money. Right. If I'd made that roll, I would add a ton of value on my short call. And if we got a big washout and I wasn't able to manage the trade, I would have a lot more extrinsic value associated with the short call and the short put as well. But the short call would just have a lot more hedgeability being pushed out another month. So that would be the one thing I'd do is just scan through your portfolio and adjust things that you can adjust. But obviously the futures products are the only things moving right now.
100%. I know we tried to get a little bit of a pullback in some of these AI names like Micron, SanDisk, Mike. It leaves me asking the question, is this a healthy pullback that we're seeing here, or is it the start to something bigger? I know whenever we look at the indices there, we put in a pretty large range. Maybe we move sideways for a little bit here. What are your thoughts on Micron, some of those AI names?
Yeah, I mean, I think these have just gone bananas to the upside.
Imagine being invested for the long, like imagine this being one of the products around 200, 300. Yeah. You're like, you know what? This would be a good chunk to put in here just to take advantage of some of this AI exposure and coming out $1,000 on Micron, 2,000 on SanDisk. I mean, I can't imagine. I know Sahil's dad, he was telling me how he was heavily trading Micron and caught a pretty big chunk of the move. I wish I was on that side of the boat, but what a move, 100% nonetheless.
Speaking of boats, that's what I always think about. I don't know why this is why I think this way, but I imagine sometime in the future, I'm going to see some yacht in the water and it's going to literally say, like, thanks Micron, or like Micron, hosted by Micron calls. Like, I don't know.
Powered by Micron.
There you go. Powered by Micron. Yeah. Yes. That's a great boat, man. But yeah.
I've seen the NQ license plates. I've seen the ES license plates. I haven't seen anything with Micron and SanDisk. That'd be hilarious. I would think exactly back to this moment, Mike.
Yeah. The only boat I've seen related to options trading, it said more theta, please. And I was like, ooh, okay. This is someone that is an options trader or has hit it big with, a Micron type move. But yeah, I think we're seeing a good pullback in a lot of these products just because it doesn't surprise me. I mean, from the beginning of March, this has quadrupled in price. So you're going to see more realized volatility, more implied volatility. But even still, like it was down 7% on Friday, but it's still up 400% in the last 3 months. So I'm not too worried about it. And it's interesting you bring that up because we did see some sector rotation out of some of these hardware stocks and into some other things. So we saw Costco rallying, we saw some of the healthcare products rallying, and that's I think a healthy sign of the general market being okay, at least right now, where instead of people moving to cash and everything's just selling off aggressively, we're seeing a rotation out of these products, but into other products in the market. So the Dow finished higher last week while the NASDAQ was still down. So I think that's going to be probably the name of the game here. And still, you have products like Microsoft. Michael Burry came out and said he was a bull in Microsoft, and that was likely the reason for this big reversal here. But still, from 460, when I thought this thing was just going to go right back to 550, from 460 all the way down to 350, our buddy Glenn was not too happy because I was like, Microsoft's a bullish trade that I have on. And, he wants another 5 days of 20 point moves naturally. But this thing only had 2-3 green bars, barely in a 3-week period, and it was down 100 points. So we were putting on some positions in Microsoft, and I think you'll see the same thing. Like you'll probably see a rotation out of hardware and into software, especially in names like Microsoft that are Mag 7 stocks. They're not going anywhere anytime soon. And if you think the E-minis and NASDAQ are going to continue higher to all-time highs, it's likely from a rotation out of these products that have gone nuts into products that haven't participated as much. That's how you kind of get that general drift higher, as opposed to the straight up rocket ship we saw from the war lows.
100%. And I mean, the point that you make, I didn't realize Michael Burry was stepping into Microsoft here, but it looks like the last day that Microsoft was traded, it had one of the highest, very obviously one of the highest volume traded days that it had seen in the last months, and maybe even over the last 365 days, actually, Mike, with Microsoft trading about 185 million shares. I believe that was last Friday, which is, I mean, drastically higher than any other trading day over the last 365 days. So I don't know, maybe that had a little bit more, I guess, oomph whenever Michael Burry's getting involved there, but definitely very active stock, no doubt.
Yeah, for sure. And I think speaking to that, I know we would love to throw on a trade idea here. I think for me, if I believe that the market's kind of just going to chop around, we're not going to see too much movement. And even if we do, I'm going to make sure I'm defined risk here. But I think the sector rotation will lend a more neutral balanced trading range in the E-minis versus the NASDAQ, because the NASDAQ is so volatile because it's pushing and pulling in the same direction, because it's all, it's all the sector or the semiconductor names, and then it's AI, and then it's software. So it's like pushing and pulling a lot, where the E-minis at least has more sector diversity. So if we continue to see that, where Micron's down but healthcare's up, and these other tech stocks that are in the S&P 500 kind of balancing out with rotation, I kind of think getting into an iron condor for the 4-day cycle, where on Monday or Tuesday, if we kind of have this chop before the jobs report on Thursday, that could be a situation where you get a big crush in implied volatility and the premium here in these 4-day options. So
maybe we take advantage of, I know I'll be taking advantage of getting on a little bit of long delta here. I'll check out some of the premiums, especially as we head into the next few weeks. I'm glad, like, Microsoft is one of those trades that I didn't catch early on. So it is one of those that looks a little bit more attractive to get on long delta after all of the aftermath, if that makes sense.
Yeah, absolutely.
Yeah.
So yeah, I think I'm going to do this. This is basically what I do in SPX. I'll just sell an iron condor for $200, risking $300. But I'm going to do this in the 4-day just to kind of put my money where my mouth is in terms of the sector rotation. Maybe we see a balanced range in the E-minis, at least through like Monday and Tuesday. Because this is a 4-day cycle. This $200 could contract to $100 pretty quickly if we are chopping around this level here on Monday and we don't really change or move too much. So I'm going to put this on.
I really like that. I really like that, actually. Yeah. Given the extended trading hours that the futures market offers, what would you say is your preference, or that you like a little bit better, rather than using something like SPY and using the strangle for that? Is it just to be able to be involved in the market and be able to take advantage of that with the flexibility that the futures gives you?
Yeah. Futures. I think when you're trading the E-minis and NASDAQ directly, I think you have a lot of flexibility with the futures products because they have nice trading hours. They're super liquid. And you don't have to deal with the gap risk. I think that's one of the hardest things to deal with as an options trader in the equity space, just because you'll have these moves where, like, I guarantee you Micron tomorrow morning will probably be chopping around, up or down 40 points from where it closed. So, and that's just the nature of the beast. So until we get extended hours for Micron, I think it's harder to manage positions, because if you have a short put that's right at the money, for example, or a short put spread, you don't have the ability to manipulate it and move it around, where in the E-minis you do, because you can set alerts 20 points out of the money from where your spread is, your short option is. You can get hit with the alert, and then you can manage a position. So I really think the futures do offer that. You also have different tax treatment if you are trading futures, and different leverage too. You have span margin. Yeah. So I like the futures products a lot. but they're kind of simple in the sense of it's harder to articulate and express an opinion in a really defined way or a really tuned way, just because it's a sector. It's not a sector, it's a futures product that has a ton of different products within it. So
100%.
There's a give and take there for sure.
100%.
Any questions in the YouTube chat that we can conquer?
Yeah, what else do we got over here? A lot of Microsoft, a little bit of Palantir in there. What has Palantir been up to, Mike?
Palantir.
I know Michael Burry had gotten that sell-off he was looking for, and maybe rolling in a little bit of those profits into Microsoft over here, but a little bit of a roller coaster action on Palantir. Decent volatility there.
Yeah, looks very similar to Microsoft.
Yeah, right.
But yeah, this is another one where what's interesting about these products is Microsoft's a little bit later, but I have a ton of positions in Microsoft, but Palantir, 50, 60% IV, so plenty of IV there. But Palantir is interesting because it's just like Microsoft. You can do diagonal spreads, calendar spreads, where you're long the cycle that's after the earnings announcement, which holds on to extrinsic value more, and then you can sell something in the July cycle that decays fully. So you also have the ability to, let's say you do a bullish diagonal spread in Palantir. If it doesn't work out, you can roll your short option into the earnings cycle and pick up a ton of premium and reduce your cost basis dramatically that way. So I have a position in Palantir, but pretty sure it's underwater right now. Yeah. So I've got the 160, 180, 200 call crab trade, and it is not looking good. So I need a bailout from earnings, basically. Okay. But the nice thing here is I sold this crab component, the short crab component, for $600, and it's basically worthless. So if Palantir continues to rally into this week, I can buy back this position, roll it out to the earnings cycle, and see if I can turn it into a diagonal spread and continue to reduce cost basis there. But I'll still need a pretty big move to the upside for this thing to work out.
I see. Getting pretty creative with it there. I know SpaceX has been a little bit of SpaceX has kind of came and went. To be honest, Mike, it's the volatility was there. I know. I mean, it came and went. It almost feels like a one-hit wonder, but I'm sure we'll be circling back to it. I got a couple of things on here that expires in about 54 days, but it's been a little bit disappointing, to put it straightforward there, Mike.
Yeah, it hasn't done what we needed it to do just yet. I bought a butterfly in here. I have the 160, 180, 200 butterfly. And then I have a super mega bull, 572 days out. So I basically just sold a put here at the 125 strike to finance an out of the money call at 300. Okay. So I took this premium and gave it up to buy a 300 strike call. And this is just a scenario where, like, if we drop below 125, I still picked up $300 for this trade, I believe. $350. So no risk in the middle between 125 and 300, but SpaceX is one of those products where if and when it does rally in a big way in a short period of time, you're likely going to see implied volatility expand. You're likely going to see call skew get infused into these far out of the money options. And that's perfect for the setup where you sell a put to buy the call. Because if you get the big move to the upside, your call is going to explode in value. Your short put's still going to lose value because it's moving further out of the money. And it's kind of this asymmetric risk profile, but you're collecting a credit to get into it. So it's still a high probability trade because my break even is down at 122. We're trading 30 points higher right now. So I really like that trade for a really long-term position. But yeah, short-term stuff, I bought a butterfly because I thought it was too cheap. $290 for a 20-point wide butterfly.
Oh, that was too cheap. You had to take that one.
Felt a little too cheap. Yeah, I was forced. My hands were tied.
100%. I know MicroStrategy is still kind of following suit where Bitcoin has been at lately. I'm starting to get a little bit interested in some long delta. Maybe not yet. It'll be interesting to see where Bitcoin at least starts to stall out a little bit from here. I really want to be careful on catching that falling knife. I mean, MSTR has been a bloodbath to the downside. So I don't know what price point Bitcoin investors are going to feel a little bit more confident to get on more long positions or just confident in the overall position. But Bitcoin trading at about 59,290 right now. I know if Bitcoin were to slide to 50,000 somehow, I feel like that's just a discount that you can't refuse. We're really not far from there. Maybe we bottom out before we get to 50,000, but at least taking advantage of some long delta and MSTR is going to be attractive. But just thinking about catching that falling knife has been top of mind there.
Yeah, I mean, this has been a wild ride to the downside here. It's been cut in half from May levels. But yeah, the crazy thing is strategy, they have so much Bitcoin that if they're forced to sell at any point in time to like keep the lights on, I think that could be a really big liquidation event for Bitcoin. But to your point, at a certain point, people are going to start buying it, and it's going to be another frenzy where people are talking about Bitcoin, trading Bitcoin. But we will see.
100%.
But yeah, other than what we've already talked about, jobs report Thursday, you've got, and that could move the markets, I think, a little bit, or a lot of it, because Thursday could be one of those really light volume days. Tesla Q2 deliveries, you have Nike earnings, Constellation Brands earnings, General Mills. Someone in the YouTube chat I saw asked if we were going to be trading earnings this week. Technically, I'm already in a Nike Leap long call at the 60 strike all the way out in Jan of 2028. This was just like, this thing's at 10-year lows. I want to get long here. So I'll be holding on to that, and we'll see if that works out. If we get a move from 40 to 50 or 55, this could be like $1,000 winner. Just based on the current value and where it was trading at when Nike was last at 60. This was like a $1,500 option when Nike was last at 60. So,
okay.
I'll be keeping an eye on that. I think Constellation Brands, what is that? Stars? No. What is Constellation Brands? I forget. Yes. STZ.
STZ.
I was close. Stars.
Close.
Not exactly stars, but
I want your measurements in close there, Mike.
Yeah. But yeah, it's a $150 product, $9 expected move in either direction. They report Tuesday after the market closes. So yeah, we'll keep our eyes on this one, especially with a pretty high implied volatility in the 4-day cycle, 9 points in either direction relative to 12 points in July, relative to 14 in August. So this is a really high distribution of premium in the 4-day cycle relative to August. So yeah, come back to the show on Tuesday and we will place an earnings trade in there for sure.
Kind of indirectly taking part in that earnings trade too.
Yeah. But yeah, I think with that, we've been chatting for 25 minutes. E-minis have not moved at all. Still up 30-ish. NASDAQ up 160-ish. Dow and the Russell up as well. And again, biggest things this week, I think, are going to be that jobs report on Thursday for sure. And you can kind of see that. And this is one of the things I like to do every week is just check out the SPX implied move. So over 4 days, 115 points. You can clearly see there's premium priced into Thursday due to that jobs report. So all eyes on that. I think that will push and pull the interest rate probabilities, but we're looking at a 25 basis point hike by the end of this year. And then Constellation Brand earnings, Nike earnings. But again, this is a short week because we have the observed 4th of July holiday on Friday. So the markets will be closed. So if you have any positions you want to manipulate or manage, you can do that up to July 2nd, which is Thursday. Just 4 days away from now, 3 days starting tomorrow.
Yeah, it looks like oil trying to take a little bit of a bid there, Mike. It'll be nice to be able to manage some of these oil positions that we had headed in as well. That one was kind of a tough trade to manage too, but we got a little bit more time on it. Maybe we get a little bit of a relief pop there, and then we can go ahead and manage. So another thing to look forward to as we get into this week. Yeah,
absolutely. And with crude oil, I'm just trading the micro crude. I have this straddle up at 76, right at the expected move, but I've picked up $500 in premium already from this collection. So sold it for $3. It was slightly in the money, and then I rolled to a straddle at 76 into this continued sell-off. So break even is at, let's call it 71.5. So we're right there. But yeah, any kind of rally in crude, or if I just keep rolling it, I'll eventually pick up enough premium to where I will bring my break even lower than the current market price. And it's easier to do now with the backwardation completely gone out of this market. But yeah, to your point, definitely something I'll be looking at. And I'll probably move this before I leave on Wednesday, because again, I don't want to have an 18-day cycle where crude could be flying around. I want to add more premium to this thing. So look for that on probably tomorrow or Tuesday. But that is all the time we have for this Sunday evening. Any final thoughts before we kick it off and send these people on their way?
No, I mean, I know it's going to be a shorter week this week. I'm hoping that Wednesday and Thursday is still pretty actionable, given we might see a little bit less volume, heading into a 4-day weekend. A lot of the big money might be sitting on the sidelines until then, but I think Monday, Tuesday, Wednesday is going to shape up pretty nice.
Yeah, absolutely. And I am working this trade here for $400, $200, the 73.20, 73.10 short put spread, and then the 75.50, 75.60 short call spread. I'll get filled on that probably tonight at some point, but I will post it to the Taste Trade follow page. As always, you can check that out here. All these trades that we place are posted here on the Tasty follow page. But yeah, I hope you have a good evening. Are you watching Game of Thrones, or are you off the Game of Thrones series?
I'm not watching Game of Thrones. Something I've been getting into is actually Billions. So kind of in that right now. I'll circle back around to you whenever I do get the Game of Thrones bite and I get hooked on that one. But no, I appreciate it. Looking forward to it. Looking forward to seeing you this week. What about you? What else? What are you? The Game of Thrones? I know World Cup's kind of got my attention. What's got Mike's attention before we head off here?
Yeah, I'm going to go eat dinner, and yeah, I will be watching House of Dragon, episode 2, see if it's better than the first one. The first one was really good. I know Gabby watches it, so we'll have to catch up with her tomorrow. But yeah, have a great rest of your evening, and everyone watching on the YouTube chat, we appreciate you and your contributions to the chat. But yeah, join us tomorrow morning. Jamal and I will be here online bright and early in the studio, 7:30 Central. But yeah, appreciate you all, and we'll see you tomorrow morning. What's up, Tasty Nation? Welcome to the show. It is a fantastic Friday, June 26th. We got the markets down just a little bit right now. E-minis down 27, NASDAQ down 325. But we got a jam-packed day for you of content. My name is Mike Butler. I'm here with Jamal Chandler. And Jamal, I know we've had a crazy